Good morning. This is Dylan Jovine with Behind the Markets. Happy Friday. Today is Friday, May 23rd, TGIF. My kids are going to sleep over at my mother's house tonight. So it means they get a little bit of a Friday night alone, which is cool. Anyway, today I wanted to talk to you about yields. A lot of folks wrote into me on Wednesday and Thursday saying, hey, why did the stock market just sell off like 1,000 points almost on Wednesday? And the market looked like it was doing fine until 1 o'clock. And all of a sudden, boom, it just started to get hammered. What happened Wednesday afternoon? Why did the market sell off with no big headlines? And why should this concern you very much? I'm going to tell you why. Basically, what happened is the government went out. It was a bond auction that went bad. An ordinary, typical bond auction. The government went out to sell 20-year bonds at 1 o'clock. And basically, investors said to the government, you got to pay us over 5%. The last auction, the last time the government tried to sell 20-year bonds, they accepted 4.6%. This time, they said, you got to pay us over 5%. So that was alarming. That sent the 10-year yield higher. And as we have learned here, that 10-year yield and the stock market is that interest rates in the stock market in general, seesaw relationship. Yields go up, stocks go down. Yields go down, stocks go up. This is the relationship between yields and the stock market. So yields went up. This auction got destroyed. And 30-year treasury yields went up, 10-year went up, and of course 20 years based on this auction went up. So basically the fact that the U.S. government had to pay people who wanted to buy bonds a lot more for 20 years meant that the 30-year and the 10-year had to go up too. And of course, that sent the stock market into a tailspin. Why did yields go up? Why did the bond market demand such higher payments, basically like 20% higher interest to lend the government money? Why? This budget bill, the big, beautiful budget bill that President Trump and Republicans are pushing through Congress. The issue is we've been running fiscal deficits of $1.5 to $2 trillion a year. These are budget deficits. This does not trade deficit. When we talk about trade deficit, in April, the Liberation Day stuff, he was talking about trade deficit, President Trump, basically the trade between the United States and the rest of the world. What we're talking about now is budget deficits. Basically, the amount of tax revenue the U.S. government spends, the difference between the tax revenue the U.S. government brings in and the amount of money it spends. The gap there has been $1.5 to $2 trillion, and it's about to get bigger by $300 billion a year. So this budget that President Trump, Republicans are pushing through Congress are going to make the deficit problem worse, meaning that the U.S. government is going to have to go out and borrow even more money than we've borrowed in the past 8 years, which is crazy. Now, remember, during Trump's first term, he added $7.4 trillion in debt. In Biden's term, he added $7.2 trillion in debt. And right now, it looks like we're going to add at least $5 trillion in debt over the next 3 years. It's actually 2, 4, 6, actually $8 trillion over the next 4 years. Wow. Crazy. That's why the market is going down. Now, it doesn't just affect stock investors. A lot of folks need to understand this. What happens when interest rates rise in the bond market? Guess what? Your mortgage rates go higher. Car loans get more expensive. Credit card loans, all loans get more expensive. So this has the spending on Washington we think to ourselves, who cares? The bond market can handle it. But it has a real effect on you and me. It makes everything we do, all the money we borrow, more expensive. It is like a tax on the American public. Remember something. They can actually cut taxes with their left hand, but if cutting taxes with their left hand raises interest rates by a higher amount with the right hand, you're not really better off. So it's fake news for you to think you're better off. Oh, it's a tax cut. It's going to be great. Now, you might get a tax cut with your left hand, but rates are going higher with your right hand and the market's going lower. What else does it do? It's basically choking us on interest on our national debt. We have about $30 trillion in debt, and we're spending over $1 trillion a year in interest payments. So basically, that starves the U.S. government from being able to invest in DARPA, defense, all the things that make a society great. We're just getting choked. And by the way, this is happening not during a recession. Economy's doing pretty well. Economy's doing fine. We're spending money like drunken sailors when the economy's doing well. It's really mind-boggling, actually. Anyway, so this will send the stock market down on the short term. It's going to raise mortgage rates, car loans, all these other things, and it is going to hit you. It's like back during Trump's first term when he sent out all those checks during COVID. Remember how excited everybody was? Everyone, my friends, we got a check, we got a check. Of course. And then Biden, of course, doubled down on that stupid decision and sent out more checks, right? You know, it was going to be outdone. And of course, 2 years later, guess what happened? 2022, guess what happens? Inflation. The same thing is happening right now. The same thing. We're robbing our left hand to pay our right hand. And the net effect, now Republicans get to run around and say, well, we've cut taxes. Well, to the masses, the uneducated might think that's a great idea. But at least as investors, as stewards of our money, we can't afford delusions. We can't afford self-deception. We can't afford magical thinking. We have to be clinical in how we look at this kind of stuff. We can't fall for bullshit. And basically, at the end of the day, we know that this is going to send yields higher, stocks lower, mortgage rates higher, and that it might be a tax cut with your left hand, but it's going to raise the price of everything with your right, which, you know, net, it's basically a wash, even less. Anyway, that's all I have. Have a wonderful weekend. I'll see you Monday.